Hello to all of you. Well, it's one of my most exciting times. I love doing these masterclasses. They really keep me energized. I love sharing. I love teaching people new information. And on top of that, I love sharing the fundamentals. You know, we had someone ask us just yesterday. They said, you know, Scott, if I come to this masterclass, is it going to be the same as the other masterclasses? And the answer is yes. And the reason being is that the fundamentals don't change. And one of the lessons that I've learned hard in my own life is if I know something, but I'm not doing it, do I really know it? I think that's really, really important. So I'm going to stop sharing my screen quickly, but just before I do, I want to welcome you to Diversification 5.0 Masterclass, the 5 most important lessons from the wealthiest sophisticated investors. And I'm going to share with you quite a lot more about what that's all about in the next couple of minutes. Now, my invitation to you, this is going to take the best part of 60 to 90 minutes, probably err on the side of 90 minutes based on the fact that people will ask questions. And on the assumption that it takes 90 minutes, my invitation to you is to put aside your cell phone, put aside your emails, put aside your Facebook, no matter where you are in the world, if it's in the nighttime in Australia, lunchtime, if you're in sort of London, Europe, South Africa, or breakfast time if you're in America. My invitation to you is how important to you is your wealth? How important it is that you to protect your wealth? Well, what we're going to look at today, with all this uncertainty that is around the planet, is we're going to look at some of the strategies that I've witnessed over the last 20 years, the tried and tested fundamentals that you can use. In fact, you can copy so that you too can protect your wealth. And that's what we're going to be going through today. But my invitation to you is to be present. My invitation to you is to really kind of focus on what I'm sharing with you, how we've done it before for literally hundreds and thousands of other investors, and how you too can achieve it. The other thing I'm going to show with you today is that there's ultimately 3 types of people in the world. There's those that want to do it themselves. There's those that want to do it with others. And there's those that want it done for them. And I'm going to share with you today the learning lesson that I've been on in terms of that journey. So, without further ado, let's get started. Let's rock and roll. Let's brace yourself in. Quite frankly, I have been doing this for now 24 years. And so I've got a lot of information and a lot of knowledge to share. But let's get you in the room. I'd like to see and use the chat box. I like to engage with people and see kind of what your thoughts are, where you are. But what would it mean to you in 12 months or less to be earning at least $5,000 passive income without any hassle or complexity? So let me know what you think. What would it mean to you? Just take some time. Think about it. What would it mean to you? And I'd love to see in the chat box if people are alive and what it would mean. So I've got a question here. I'm sorry, I'm not quite sure how to pronounce the name, but I'm going to say Mish, 5,000 a month. It could be 5,000 a month. It could be 5,000 a year. It could be 5,000 a week. At the end of the day, it's what you want in terms of your goal. So there's no right or wrong answer to that question. So I've got, it would be a great deal for me. I've got freedom of time. I've got, will relieve anxiety much. What else will it mean to people? And while I'm bringing that up, I've got a second question for you. How would you like a system that statistically will help you get there 5 times, so 500%, 5 times faster, safer, and simpler? So those are 2 questions that I intend to answer for you today. And I not only want to show you how you can build a globally diversified passive income and how you can do it without any hassle or complexity, but I also want to show you how you can do it 5 times simpler, safer, and faster by using tried and tested systems and methodologies that have effectively been proven statistically. What are we all about? Well, I believe very strongly in wanting to help people live a life unlimited. And how do we do that? Well, we do that through Diversification 5.0, and I'll be explaining to you in more detail what that's all about. But before we get started, I want to start off with a story because I believe that this encapsulates what we're talking about. So it was 1976, and the one brother decided there were two brothers. They were living in a country called Zimbabwe. In those days, a country called Rhodesia, but it's now called Zimbabwe. It was 1976, and there was a lot of political unrest and economic challenges in the country. And the one brother decided in 1976 it was time to leave. He had no forward planning. He literally got in his car with his wife, and they drove from Zimbabwe to South Africa to a place called Durban. So very reactive, not in control of his future. And literally in those days, you couldn't take any money out of the country. So it's whatever you could fit in the car is what they did to move. The other brother did it differently. The other brother decided in 1980 to start. So he stayed in Zimbabwe, but he started investing offshore. He started to build globally diversified assets. And in 2003, he decided it was time to immigrate to Australia. And so he bought his way into Australia. Yes, you can buy your way in and buy passports if you know what you're doing. The second thing is he bought a house for cash in Brisbane. The third thing is he sent his kid to one of the best schools in Brisbane. And that same kid actually got offered to, rowing scholarships, etc., at some of the top universities in the world. But most importantly, he didn't have to work for an Australian. And what I mean by that, in a joking way, is that he had created his life. I've met someone in Australia before that came from another country, and he said in his country he was a general, and now he arrived in Australia and he's a foot soldier. My philosophy in life is if you build up your momentum and if you build up your wealth, you want to be able to protect it so that you're in control of your life and you have the freedom. And so the question I have for you is, which one of those two brothers would you like to be? Because today you get to make a decision. You get to decide if you want to be passive and you want to kind of, go with the flow and kind of see what happens with the world economy and the political environment and whatever's happening in your country, or you can be proactive, you can have a strategy and a plan, and ultimately you can protect your wealth and you can be diversified and not beholden to any one economy, any one country, any one asset class, or even any one currency. And I think we all get to make this decision in life. And so for me personally, that first brother was my father. There's a picture of me and my dad on my very first property project. I was 13 years old. I basically persuaded my parents that I didn't want to live with my brother anymore in a bedroom. So we extended the house. And what was interesting is that I learned from my dad what not to do, because my dad literally did what we were all told to do. He went to school, he went to university, he got a great job, he worked really hard, he invested, he paid his taxes. And yet when my dad died at the age of 59, he died broke. And I have to say, I looked at that as a young teenager actually, and I said, this is ridiculous. I'm not following the system. It doesn't work. And I went and did the research, and 94% of people statistically in England, Australia, and America, 94% of people will follow my father. At the age of 65, they'll either be dead, broke, or reliant on the government. Now, a further 5% will be what's called financially independent. And so a lot of people think, yay, that's great. I'd love to be financially independent. The problem is that those people that are financially independent, according to the financial industry, earn 25% less than their last paycheck. So in my opinion, you're just 25% poorer. And so when you look at the statistics, what astounds me is that 100 of us start a race. 100 of us start a race, and only one person finishes the race at 65. They don't win the race. They're the only person to finish the race. And so I decided at a very young age that there must be a better way. There had to be a different way. And so I went out, and I'm sure like many, many of you, I went out and I read all these books, Rich Dad, Poor Dad, Real Estate Riches, Think and Grow Rich. I even wrote the book, Property Going Global, Unshakable, Your Financial Freedom by Tony Robbins, Money, Master the Game. And I could go on and on and on about all the different courses. And if you look at the cash flow quadrant, he teaches about the E, the S, the B, and the I. And we've all learned about this, or if you haven't, I highly recommend that you go and read the book, Rich Dad, Poor Dad. And I don't have time today to go into the details of the E, the S, the B, and the I, but most people are looking at how to get to the I. How can they ultimately have the freedom? How can they make their money work for them? As Warren Buffett says, if you don't learn how to make money work for you while you sleep, you'll be working for the rest of your life. And so I came across the first major myth, and I had this big epiphany, because I'm sure that many of you that are on this webinar, and I don't care what your age is, and I don't care how sophisticated you are, many people have probably been through this journey or are going through this journey the same as myself. I thought I had to do it all on my own. You know, when you read this book, where's it gone? Real Estate Riches, Dolph de Roos literally says, you must go out, you must look at 100 houses, you must put an offer on 10, you should get accepted for 3, and you should buy 1, and you should buy the property, and you should do the management and everything in between. So, you know, I read all the books. I went on the courses. I've done, you know, you name the course, Dr. Hannes Dreyer or Kurt Coetzee. I've done all the degrees. I have an honors degree. I have a master's degree. I have a CRS, which is the top residential specialist out of America. I have AIPP, which is one of the top ones out of the UK. I have PDP, which is one of the property development courses, etc., etc., etc. I tried to gather all the knowledge from around the world, but I tried to do it all on my own. And I realized, like I told you, there's 3 types of people. People that want to do it all on their own, people that want to do it with others, and people that want it done for them. And I realized about 13 or 14 years ago that there was a much easier way to achieve the objectives with a lot less risk and a lot safer. And today I want to share with you what that learning was. Because what I realized is it literally came down to the simplicity of having the right information and the right partners. I didn't have to go and do it all myself. All I had to do was make sure that I get access to the right information and to the right partners. And so let's look at how that epiphany moment worked, because I'm hoping today that you're going to realize that it's as simple as making sure that you get access to the right information and the right partners. So I've already told you about my first project I did when I was 13 years old, my first property or real estate project, depending on what word you want to use around the world. I then did my first property development when I was 22. We bought a house in Rondebosch, Cape Town, South Africa. We redeveloped it into 6 townhouses. At 24, I did my first London property. We basically bought this terrace property here, and we renovated it, and I'll talk a little bit more about that later. And at the age of 25, I realized I'd be the world's worst employee. And so, because I was doing all of that property stuff on top of a full-time job while doing a full-time master's. And so I decided to start a company, and it's called International Property Solutions. And we effectively helped thousands of people to invest in South African property. We helped hundreds invest in London property. We helped hundreds invest in Australian property. And we helped hundreds invest in American property. But what I learned while watching this was that we were doing something wrong. We were all buying houses or apartments, and yet that's not where the money's made. Now that's for a different masterclass. There's called the value chain of real estate that is very, very important for you to understand. But what I realized, and again, if you read this book, Rich Dad, Poor Dad, Dolph de Roos and every other commentator when it comes to property or real estate will tell you the real money is made in commercial property. And so I thought to myself, well, I want to get into commercial, but I didn't know how. And there's huge barriers to entry. And so what people tend to be is they get stuck in one country. There's massive barriers and hassles to investing in international property or in commercial property. And that's not even taking into account all the complexity of banking, trusts, compliance, partners, etc., etc., etc. And what I realized was that the 99% do not have the same ability to invest like the top 1% do. And that's why we have the stats that we have. I'll give you 2 stories to explain this. So it was 2008, 2009. I was actually with a lady this morning. called Fiona, and she probably would recognize this brand, Barratt Homes, one of the biggest developers in the UK. And when the crash happened, late 2008, early 2009, the developers got themselves into trouble. They had sold properties around the world, and a lot of the buyers didn't come to the table because the banks reneged on the mortgages. So in this developer's case, it was a huge community of Irish buyers that all just reneged on their 10% deposits. And although you could buy these properties, they were selling these properties at £330,000. We could buy them for £165,000. There were 48 units. They were fully furnished. They were fully tenanted. Literally, for me, it was a no-brainer. We were buying them at a 40% discount. Okay, they had an 8% yield. That means positive cash flow income. And I literally said to people down the bottom here, this was an email I sent out to investors. I said, I don't care what happens with market values in the short term. This represents a real opportunity. And there was one small little problem. You couldn't buy, like most investors think about doing it on their own. Remember what I told you? Do it on my own, do it on my own. I must control everything. In South Africa, I'm not Afrikaans, but in South Africa, there's a great saying, "Fair fun, your skud, no on your skada." I don't know if I pronounced that right, but the point being is that, your assets must be close to you so you can look after them. People want to do everything on their own. Well, the problem is that to do £10 million, we had to partner. And I couldn't get the investors to work together. I went back to Barratt Homes. I tried to buy one unit and they just laughed me out of the door. Now, what's really interesting, if you look at those properties today, those properties would be retailing for anywhere, and I don't know, give me a number. What do you think they would be retailing for? Put it in the chat box. Wimbledon, so in Wimbledon, Zone 3, London, what do you think a two-bedroom flat would be retailing for in London right now? I'm just interested to see if anyone wants to have any guesswork. So I've got 800 here from Michelle. I've got 10 million Rand, which is actually, I've got 700, a couple of £1 million. So by my conservative guesstimations, I'd say somewhere between 700 and £1 million, depending, okay? And depending on who you ask. And so we would have not only quadrupled our money, because remember 165, 330 times 2 is 660. You would have quadrupled your money, but most importantly, you would have had positive cash flow income from day one. One small problem though, we needed £10 million cash, and I couldn't come up with it quick enough. The second story was, it was 2009, it was Bondi Beach, Sydney, and I bumped into these two very wealthy gentlemen, and I said to them, we're in the middle of the global financial crisis. What are you investing in? And they said, medical properties. And I said, why medical? I said, I've got all the degrees, and without being arrogant, but cum laude and everything in between. And I'd never heard of medical. And they said, well, think about it, Scott. No matter what happens in the world, people need doctors. I was like, okay, that makes sense. They said, doctors never leave their premises. I remember thinking, like, that's true. If I go back to my childhood, my medical premises are still medical premises. And thirdly, doctors are very good at being doctors, but they're not very good accountants. And so they sign very good long-term favorable leases. And I remember thinking to myself, bloody hell, that should have been chapter 1 of Real Estate Riches. Like, that's the absolute no-brainer. I said, how do I get involved? And they said, no, it's very simple. It's 5 million Australian dollars. There's 8 tranches. We're raising $40 million. And if you came in, it would be 5 million Australian dollars. So I ran around and I went back to my 2,500 investors and I said, guys, there's an amazing opportunity. We should participate. 5 million Australian dollars. Anyway, that company went on to list on the Australian Stock Exchange, and today is worth, as I understand, about $700 million. But we didn't participate because couldn't get the $5 million. And both of those stories created enough pain for me personally to ultimately create Wealth Migrate. And we did our first commercial property in 2014. It was a $16 million portfolio of 6 medical buildings. We raised $6 million in 90 days from investors on 5 different continents. And we actually bought this entire portfolio. That was the first time for me that I experienced investing in commercial property. But what I realized was I didn't have to do it all myself. I didn't have to have all the knowledge to be able to do everything myself. And that was this epiphany moment, this epiphany bridge that I talk about, where in the past, and when I read this book, and I'm sure most of you have read this book, it's do it all yourself, do it all yourself, do it all yourself. And I realized there's a completely different way. With the right information and the right partners, I could get access to much better quality deals. Since then, we've gone on to build the platform. We've got members in 178 countries. We've done a deal value of over $1.29 billion. We've had over $100 million invested through the platform, of which $30 million has been paid back in deal exits or dividends, etc. And we've won numerous different awards around the world, including a 50% reinvestment rate from investors. So whether you want to invest in America, England, Europe, Australia, or even South Africa, I don't believe you have to choose anymore. It's now about being able to diversify. So why do investors want to diversify? Well, again, everyone's got their own reasons, but what I learned, having done this thousands and thousands and thousands of times, is that the number one reason is that people want to preserve their wealth. The number two reason is they want to have a plan B. The number three reason is they want to have peace of mind. No matter what happens in the global economy, no matter what happens in their local economy, no matter what happens, politically or with currency or with asset classes or partners, they want to have the peace of mind to know that they are globally diversified. And most importantly, I believe, for me, it's about freedom. It's about freedom of choice. And, I use a story that uncle of mine, last year, his brother-in-law was sick. So his brother-in-law lives in South Africa, and he didn't have medical aid, so he'd have to go to a government hospital, and he'd had to have an operation that was quite an intense operation, and he could die in a government facility. And so my uncle flew out from Australia. He came on a one-way ticket. He didn't know how long he came with his wife. They picked up their brother-in-law. They went down to Cape Town. So not only did he not have a boss that he had to ask questions for, not only could he take as much time as he wanted, he took him down to Cape Town. He went to see one of the top specialists in Cape Town. And the specialist said, look, I can definitely help your brother-in-law, but I can't help him because he doesn't have medical aid, and I have no idea how much this will cost. And my uncle said, don't worry, I've got it, it's covered. So he was able to effectively write a blank check because he had no idea how much it would even cost. And anyway, the good news is the operation was successful. The brother-in-law is fine, and it was all a huge success. But for me, that epitomizes what I talk about when it comes to freedom of choice. It's to help those of you, that are close to you. It's to decide where your children go to school, or where they go to university, or what country you want to live in, or even what you do with your time. It's the freedom of choice, which I believe is so important in terms of this overall objective. So we live in fascinating times. We've had the Ukraine war, which has been going on a year. We've got inflation at 40-year highs. We've got interest rates rising all over the world. We've got fuel prices going up. We've got the stock market up and down and all over the place. And if you live in South Africa, we've got, now they're even talking, level 12 load shedding. And if you lose me, by the way, I'll get my backup generators working, or backup batteries, making sure that everything's sorted. So what do we do in these fascinating times? And more importantly, are these the first interesting times that the world's ever been through? No. And that's the beauty, because we can learn about diversification. And that's what this masterclass is all about. Diversification 5.0. What is that to do? Well, there's 5 things. You want to diversify across countries. You want to diversify across currencies. You want to diversify across assets. You want to diversify across partners. And you want to diversify across time. That's it. 5 things that are absolutely critical to diversify about. And it's all about globally diversified passive income, which sits at the center. Now, what's fascinating is that I'm learning more and more that people have been following me for 20 years. I've literally been presenting live on stage since 2004. And so it's 19 years that people have been following me and been attending events. And I'm sure that there'll be many of you that are online now that might remember sitting in one of these rooms, watching, learning, whether it was South African property or London property or Australian property or medical property or American property or et cetera, et cetera, et cetera. But the question I've got for everyone is, what is the pain of not taking action? Whether it was the small groups, whether it was large stages in front of, I think the most I spoke to was about 1,500 people. I've tried to share my learnings of dealing with some of the wealthiest investors around the world and how they've invested and how they have diversified. I've had the privilege of sharing stages with the likes of Roger Hamilton and Brian Walsh, whether we're sitting around campfires or doing wealth weekends and teaching people and bringing in top quality partners. I mean, we were talking to a gentleman just this morning, and he came here in 2017. We showed a whole bunch of investors an opportunity, a deal. And if I've got my numbers right, we were going to buy this commercial opportunity for $68 million. That building was exited for $80 million. And it was quite a quick exit as well. Now, we didn't take action on that deal. We lost out on that deal. But that's a classic example of there's a whole nother game going on that most people have not been invited to. And whether it's a live event or even webinars, many people have been following and listening for years, but they haven't necessarily taken the action. And that's why I say there's three types of people. There's those that are going to try and do it themselves. And statistically, according to Harvard, literally within 3 months, 10% of you or less are going to do nothing. 10%. Those that want to do it together in a community, their success rate is somewhere between 30 to kind of 65, 70%. Okay, again, according to Harvard. So by working in a community, you've got more chance of success. And then those that want it done for you, and that's what we explain with our mastermind, that's where your success rate is nearly 100%. It sits at 95%. And so what I want to share with you today, and I'm going to share with you in a little bit more detail just now, but I think it's really, really important that people understand this, because I had a gentleman that said to me, Scott, I'm not sure. Maybe I need a bit more time. And I've heard lots of different reasons why people have not been able to make a decision. And so I thought to myself, well, let me calculate it. I learned this lesson of Dr. Hannes Strayer back in 2002. And it's a concept that I learned about from Hannes Strayer about future proofing and how you build up the value of something. So most of us are very bad at making decisions for our future. So we might eat a chocolate, or we might smoke a cigarette, or do something that's unhealthy. We don't realize the impact it'll have in 10 or 20 years. Well, it's exactly the same with wealth. You make a decision today, you don't see the immediate benefit. You only see the benefit in 10 or 20 years' time. And so you need to make the right decisions. And so what Dr. Hannes Strayer taught me to do years and years ago was, this gentleman that I was talking to said, well, look, he's got a portfolio and his average return is about 7%. And I said, okay. And to be honest, that's probably being quite kind on himself with regards to the fact that, if you take devaluation of currency, et cetera, et cetera. And I said, well, what about if you invest $1,000 a year? $1,000 a month, which is $12,000 a year in terms of your investment. Or, you might be someone who's starting with, let's say, $100,000 or whatever. But I just wanted to work out the returns. Now, just as a matter of interest, I'm going to share with you, but if you take the S&P, okay, for the last 20 years, the average return has been about 9.5%. So effectively the top 500 companies in America. The investors that are trying to do it themselves have averaged about 3.6%. If you take all the different asset classes since 2010, you can actually see their entire return and their blended portfolio. But what you basically are looking at is the stock market, so the listed environment. You're looking at an average return of between 8.5% to 9.5%. If you take alternative investments, like commercial property, like private equity, etc., you're looking at anywhere from sort of 15 to 20%. And if you take private equity as an example, over 5, 10, 15, 20 years, you can see that it kind of averages anywhere sort of 13, 14, sort of 12%. And then you can see what happens with kind of, blended returns in terms of the overall returns and what happens depending on how much private equity you have. And then finally, you can see the returns of what we achieved even, in the year of COVID of around 14%. So what I tend to say to people is that this gentleman was getting 7%. Let's assume that he could get 14%. If he was getting access to the right information and the right partners, can we assume that a blended return of 14% in terms of that process? Now, if you look at this, and it becomes really interesting, if he was to, literally take $1,000 a month times, a year, so that's $12,000, and he was getting 7% return himself, But if he was to work with others, he could get a 14% return. The difference would be literally, $408. Now, in present value, so putting it into today's money term, it's $385. So as an example, if he was going to spend $5,000 to get access to the right information and the right partners, would it make sense for him? And the answer is no. It would make absolutely no sense at all, because, you'd spend $5,000 to make, short of $400. But look at this. If he was to do it over a 5-year period, now he's going to invest $5,000 now up front to get $10,000 in today's money, nearly $11,000. It's a 218% return on investment. Now, who of you would not invest in something if you were to invest $1 to get $2 back in today's money? But I want to keep going to show you the time value of money and how important this is. If we were to take 10 years and you invest $5,000 over a 10-year period, in today's money, it would be just short of $50,000. So literally, you invest $5,000 to make nearly $50,000. And finally, for me personally, most of us are in this game for a lot longer than 5 or 10 years. It's, certainly 20, 30, and even generational wealth. And over a 30-year period, that $5,000 would be the equivalent of $750,000. And so I want to just see there in the chat box, just say yes or no. Yes, if you think it makes sense to invest $5,000 in yourself up front to ultimately get these type of returns long-term by getting access to the right information and the right partners, or no, and to say, no, I'm going to do it all myself. I'm going to keep sticking to the same strategy that I've used. And, you've got the pain of the long-term implications. So I'm just interested. I want to see if people understand what I'm talking about. And this is what I call the pain of not taking action. And I want to show with people, the difference. Now, just to give you an example, this particular gentleman had over $100,000. Okay, so if I was to put in $100,000, and again, in year one, would it make sense to invest $5,000 to make $3,200? No, it wouldn't. But in year two, he would have invested $5,000 up front to make $13,000 over 2 years. And on that basis, it makes perfect sense. So for me, the lesson in all of this is how many people are sitting there and have not taken action, for whatever reason. They've been following, they've been watching, they've been on, to live events, they've been to webinars, they haven't taken action. What does that lack of action cost you individually? Because I know for me personally, once I discovered the secret with the right information and the right partners, it was a game changer for me. And that's one of the reasons why, and I'll talk a little bit about it later, we created the mastermind. Because for me, a mastermind is statistically proven to help you achieve something 5 times faster, simpler, and safer. And I'll share with you how you too can get access to the right information and the right partners. But before we go there, I promised to share with you the 5 lessons that I've learned. Literally, I've been investing since 1999. So I've been doing this 24 years now. I've watched multiple crashes, whether it was the dot-com boom bust, whether it was, the epidemic in 2003 and the bloody flu thing, whether it was the great crash of 2008, 2009, the GFC, whether it was the COVID calamity, or whether it's the current energy, inflation, interest rate challenges. And what I've learned from watching some of the best investors and the wealthiest investors, and I've had the privilege of helping thousands of people, and you'd have to be a bit of an idiot not to spot patterns and trends. And that's one of the things that I love to do, and one of the things I think I'm quite good at, is trying to take all this complex information and to simplify it. And I believe there's 5 things that the top investors do when they're investing, but most importantly, actually in these times. So not when the times are easy, but when the times are tough. There's 5 things that they do. So the first one is trends. And I talk a lot about a guy called James Painter. And in fact, in this book, Property Going Global. So I literally wrote this book It was forwarded by Clem Sunter. And chapter 2 was actually written by James Painter. So I've been following James for over a decade now. And the way he looks at currency is he looks at how you can actually forecast. So very similar to weather forecasting. Now, he did an event for our wealth hackers. I found it absolutely fascinating, where he believed the stock market over the next 10 years or so could lose anywhere in the region of about 85%. Now, again, I'm not here to sit and debate whether that's true or not. What's really important, though, is if you look at the trends, why is there so much money moving into alternative assets? And the reason being is that the primary markets, the stock markets around the world, are under severe pressure. So if you want a copy of my book, Property Going Global, just type in that book, and I'll share with you at the end how you can get access to my book. Now, don't get me wrong, my book was written in 2014, it came out, and it was written as an evergreen book. So it can teach you how to invest in England, Australia, America, South Africa, and 16 other countries. I teach you about GIDS, the Global Investment Due Diligence System. I teach you about scenario planning, and that's why Clem Sunter actually endorsed it. But my business partner, Shane, said to me the other day, Scott, are you going to write another book? Because it's time for an update. I said, no, dude, I'm never writing another book. Like, that was terrible. I don't want to do it again. And so I'm quite excited to say, you need to watch the space, because what he has challenged me to do is to turn this book into a course, a digital course, an updated digital course. And that'll be coming out soon to help people take diversification. And this book was primarily written for residential, and also evolve it now with the last decade's worth of knowledge around commercial. So yeah, just in terms of where things are going. So that for me is trends. It's critically important to know where the economies are going, where the stock markets are going, where the currencies are going. One of the guys that I follow most is a guy called Ray Dalio. Now, I highly recommend that you go out and you research Ray Dalio. You try and read everything that he's got to say about everything. He built the biggest hedge fund in the world, and you know, Bridgewater Capital has about $160 billion under management. You can't get your money in. It's a closed fund, but you can't get your money in unless you had $100 million in cash. Yes, you heard me right, $100 million in cash. And until he was about 75, he shared none of his secrets. And then he actually opened up for this book with Tony Robbins called Money Master the Game. And this is where I learned about him. And since then, I've been following him for about the last 10 years. And he says that you've got to look at all the long-term trends. So you've got, on the left-hand side, you've got growth. At the bottom, you've got time. You've got productivity, which should be increasing. And then you've got your short-term debt cycle. You've got your long-term debt cycle. So this is 5 to 8 years. This is 75 to 100 years. And what's quite scary at the moment is that, there's a great book called Principles that I would highly, highly recommend, where you've got the short-term debt cycle, you've got the long-term debt cycle, you've got political instability, you've got economic instability, and you've even got the global monetary system, all changing and colliding all at the same time. So you've got 5 massive macroeconomic and political and socioeconomic factors all happening right now in this decade. So as an investor, do you think that if you were to look back 500 years and look at all the patterns and trends and make decisions going forward based on copying the fundamentals and what worked over the last 500 years, do you think you'd make better decisions than if you just sat here based on your gut feel or trying to go and read another book or go on another course? That's the lesson I learned. Get access to the right information. And so I'll give you a story. You know, when the last crash happened, the big crash of 2008, 2009, everyone was going crazy. Stock markets were plunging. Banks were going out of business. Even insurance companies were going out of business. And if you take London property, depending on who you speak to, lost about 20%. Okay, and it happened quickly. And so what a lot of investors do is they focus on this part of the curve. They'll go, oh my gosh, property lost 20%. But if you look at trends, if you take price and you take time, if you understand the simple factors of supply and demand, you would know that there's a lot more demand for London property than there is supply. And so the fundamentals long-term are well positioned. And so even though there was a blip in the market, within 12 months, the London property market had recovered by the end of 2009, beginning of 2010. Has never once looked back. And this is again an example of understanding cycles and understanding trends. So a real life example. This was a building that we bought called City Peninsula, and it's in Greenwich. And effectively, Greenwich is one stop from Canary Wharf, which is the new financial capital of London. And we helped a gentleman buy 4 units there, cash. He bought them for £313,000. His name was Don van Rensburg. We bought them at a 26% discount, because again, this was from Bellway Homes. It was 2009. The developers were in trouble, as I've already expressed, late 2008, beginning of 2009. That gentleman experienced positive cash flow rentals for 10 years on all 4 properties. And about a year ago, he sold them for £1 million each. So who here would like to buy property for £313,000 and sell it 10 years later for £1 million+? And the best part is have constant, cash flow the entire way through. And people say, well, you just got lucky. No, we didn't get lucky. If you look, this was an article that came out in June last year. The Greenwich Peninsula is having 17,500 homes built, 84,000 square meters of commercial and retail space, 20,000 square meters of cultural attractions. This company alone, like Dragon, is investing 8.4 billion in this Greenwich Peninsula. And all that we did with our investors was get in early, because the trends were going in the right direction. Another good example, Ryan came to me in 2008, 2009, and he had a big residential portfolio in South Africa, and he wanted to immigrate to Australia, and he wanted to diversify and build a portfolio. So he bought 7 properties, 2 in the UK, 5 in Australia. And what was interesting in 2009 is the Australian property market was the best performing property market of all the top 20 countries in the world, the G20. And so he bought properties in Brisbane and Melbourne, and 5 years later, he immigrated to Australia. He sold off those investment properties. It enabled him to get his business established. He now lives comfortably on the Gold Coast in terms of that process. Another example, in 2012, Michael came on a buyer's trip with us. So it was February 2013, actually. He came on a buyer's trip with us. And I'll never forget, he told me his goal was to ensure that he built a globally diversified passive income so that his daughters had freedom. And he had a specific number in mind that he was wanting to achieve and how he would actually achieve it. And what I'm super grateful for him is that 10 years later, he's achieved it. He's globally diversified. He's built up those global, that globally passive income. And he's actually immigrating to the UK with his daughters. He's given his daughters that freedom that they want. And he actually wrote me a message fairly recently. He said, when I joined you 10 years ago, it was the best money I've ever spent. So for me, when you look at trend analysis, and again, I talk about this in the book, Property Going Global. Oh, sorry, by the way, I forgot to mention that Ray Dalio. I've done a 90-minute, what we call wealth hack on Ray Dalio. I took all his information and I synthesized it down into 90 minutes. And if you, at the end, I'll show you how you can get a bonus as to how you can get access to not only my book, but I'll also give you access to my wealth hack on Ray Dalio, because it took me weeks and weeks and months of studying Ray Dalio and then condensing everything into 90 minutes. And I shared it with our community. Remember, access to the right information and the right partners. So when we invested, if you look here, when we started investing in Australia, when we started investing in England, when we started investing in America, 3 different markets. It's all about reading the trends and the fundamentals, not what your friend thinks, not what your broker thinks. It's also, when someone tells you London property is the best place to invest, London properties, it's rubbish. No asset is the right place to invest. Even medical has had a seriously tough time over the last 2-3 years because of COVID. No one asset class is perfect. No one market is perfect. That's why you have to diversify, but you have to get the trend analysis right. And I've already shown you this graph today, but if you look at the average returns made by the stock market, you're looking at about 8%, whereas private equity, you're looking at closer to 12, 13%. And what's really interesting is that even though there's a better return, there's more risk in the stock market. So what most people have been taught is higher the risk, the higher the return. It's rubbish. You want low risk and higher returns. And we've achieved an average of about 14%. And so when one looks at the market and you look at trends, you say, well, where's the world going over the next, 2023? You could go and literally read these reports. I can give you the reports of the top 19 investment banks around the world. You can literally go and read it all yourself. Again, you can do all the information and do all the work yourself. Or, for our partners, they got access to our family office. So just my interest, do you know what a family office is? So just type in there if you know what a family office is. I'm going to have a quick sip of water. I'd be fascinated to know what your thoughts are on whether you know what a family office is. I'm not seeing any typing. Does that mean that you've lost me? I'm boring you? I can see a couple of people are saying yes. So what's really interesting is that a family office is a private wealth management firm established by ultra high net worth family that provides that family with a selection of personalized services that include investment management, financial planning, estate and tax planning, philanthropic investing, concierge services, and more. It goes on, and this is by Investopedia, to say that you need on average $250 million to be able to have a family office. And this is what I love most about technology and what I call smart investing. I have a smart watch, I have a smartphone, I have a smart TV. Why are we not using technology when it comes to investing? And so we did a webinar for our mastermind participants, and our family office partner, who I'll talk a bit more about later, took us through all the different asset classes since 2008. And what's really interesting is you can look at the trends, look at cash, look at the purple here, look at how it kind of rises to the top and then it falls. Or what about REITs as an example? Look at REITs, like the light blue, kind of rises in a trend and then kind of falls. Or even commodities. Look at how it rises. Okay, so it's right at the top now. So is it a good time to be buying commodities or a bad time? Well, again, look at the trend analysis. Now, I don't have time to go into all the details, but can you understand the power of making sure you get the trends right? Because if you do, and I've taught you already, it's about getting access to the right information and the right partners. And it's the information which is going to ultimately help you. The second major lesson is risk and how do you manage it? And I learned this from two people, one being my uncle, one being Warren Buffett. So when the last crash happened, I remember phoning my uncle and saying, Bill, what are you doing? And he said, well, Barclays Bank was going bankrupt, and where are you putting your money? He says, I'm investing in Coca-Cola. And I said, why Coca-Cola? And he said, well, think about it. They're diversified around the world. They've got multiple income streams. They've got multiple products. And most importantly, they pay a good income. They pay good dividends. And I remember going, wow, that's incredible. And then I read a book called Snowball, which is the autobiography of, or not the autobiography, I think it's the biography of Warren Buffett. And I found out that Warren Buffett owns 15% of Coca-Cola. I thought, wow, that's really, really interesting because he invests for income. Well, I learned that lesson myself. If you look at this date here, it's 2002. So my first property I bought in London, we just had September the 11th. England was going to war with Afghanistan. Oil prices were going up, inflation was going up, interest rates were expected to go up. And all my clever accounting friends said, you bloody crazy, you shouldn't be buying property. Interest rates are going to go up. And I said to my friend when we bought this house, I said, yeah, but if we put a conservatory on, we can turn this 3-bedroom property into a 5-bedroom property, and we can earn positive. We can now rent out, rather than 3 bedrooms, we can rent out 5 bedrooms, and we can have a nice positive income margin. And we've owned this property for 20 years now, and we've literally ridden the waves of the good and the bad times, all through the process, earning a good positive income. Now, when I compare that to my friends, they waited till 2006, 2007, and they went and bought a swanky apartment on the hill, and all that they were focused on was capital growth. And the problem is that, middle class and professional people go after capital growth, and when the trouble hits, that's when it's like betting against winter. Like it does come, and then your capital growth falls. But wealthy investors invest for income because it's income that gives you freedom. It's income that protects risk. And so imagine having a globally diversified income, how much more freedom that'll give you and how much more that'll diversify risk. Another example was these medical buildings in America. So when I went to start looking at American property in 2010, they always say when there's blood on the streets, there's opportunity. And I looked at the residential market, and depending on which city you talked about, the residential market lost anywhere from 40 to 70%. Properties in Las Vegas lost 70% of their capital value. And yet medical buildings just kept paying the rent, steady Eddie, all the way through. And again, I learned about managing risk. Another great example was right in the heart of COVID. We've been investing with a company called Feldman. They've been around for 42 years. They've got $3.5 billion worth of properties under management. This was a building that we invested in Fort Lauderdale in Florida. And again, back to trend analysis, there's huge amount of people moving from New York and Chicago down to Florida, or from San Francisco and California into Texas. And there's significant opportunity. And so they were buying office space at a cheap price because of what was happening with COVID. They would COVID-proof the building, and they've actually been paying a really solid return the entire way through the process. And so another good example was this lady, Hilda Lunderstedt. She literally came and started investing with us about a decade ago. She started investing in commercial real estate offshore, started building a commercial passive income. I actually managed to get an invite to Necker Island. And so this was her and I on Necker Island with Richard Branson. And it was her properties that paid for that experience for her. And then she actually immigrated to America back about 4 years ago. And it enabled her to be completely established and to get set up in America. And that's the benefit or the bonus of having a globally diversified passive income. It gives you that freedom of choice. Which brings us on to the third major lesson, which is all around diversification. And I believe this is the single most important lesson when it comes to financial success. It's not just my opinion. If you go follow Ray Dalio, he says that what you should be doing is diversifying across asset classes, within asset classes, across markets and currencies, and across time. And he's got a magic formula. And this is his formula for investing. He says you need to make 15 uncorrelated bets in an attractive array of assets that don't move in tandem. And if you do that, it'll reduce the risk by 80%, and it'll increase the risk-return ratio by a factor of 5. Now, I want you to take 30 seconds. If we were in a live room, I'd say, talk to the person on your left or talk to the person on your right and discuss it. But just take 30 seconds and try and think about what is that message saying? Because if a guy that manages $160 billion and has been one of the most successful money managers or hedge fund managers over the last 40 years, if that is his secret formula, then surely we should be copying it. And if you agree with that, if you don't understand the statement, but you agree that we should be copying it, just write in there, yes. So I can see lots of yeses coming through. So let me simplify it for you. I don't have time today to go into this in a huge amount of detail, but all that he's really saying is that you need 15 quality investments. So you need 15 quality investments that don't move in tandem. So that means they're not correlated. So 15 quality investments that are not tied together. That's all you need. So 15 quality investments that are not tied together. If you do that, then you'll reduce your risk by 80%, and you'll increase your risk-return ratio by a factor of 5. Now, we've all been taught the higher the risk, the higher the return, and yet Ray Dalio is saying rubbish. Drop the risk by 80% and increase the risk-return ratio by a factor of 5. So we can do it all ourselves and we can keep following our own intuition and methodology, or we can literally get the right information and have the right partners and reduce our risk by 80% and increase our risk return by a factor of 5.
So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way, to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Diversify well, be humble, don't market time, and be conscious of the dangers of cash.
So that was a TED talk by Ray Dalio. And again, we can send you the full thing, but he said, yeah, you need to know how to diversify in assets, countries, and currencies. You need to know how to diversify your wealth is the most important thing. Do not think that cash is a safe investment. Cash is almost always the worst investment. Think a little bit unconventionally, diversify well, be humble, don't market time, and be conscious of the dangers of cash. And so let's look at some of the mistakes people make. Well, the number one mistake. So I have a doctor that I know, and he went to go and see his financial planner, and his financial planner said, no, what you need to do is put all your money into your house. Keep paying off your house. The problem is he lives in South Africa. The rand is devalued by 6% year on year for the last 40 years. And so not only is he investing in an asset where he's got all his eggs in one basket, in one asset, in one country, in one currency, but that currency is also devaluing by on average 6% year on year for the last 40 years. And as an example, back to trend analysis, do you think that's a trend that will continue? Another great example of a mistake is that, I have investors that come to me all along and they say, no, but I buy, apartments. I buy lots of apartments and I get great, in South Africa's example, I get great capital growth. I go, but guys, it's not making you an income. You're literally taking money out of your pocket. So by the time you bought the property and paid off your mortgage and paid your rates and taxes and paid your maintenance and paid your management fees and paid your levies and it's actually costing you money every single month. And so, one day you might get capital growth on a might, a hope, and a prayer. Okay, it's costing you money every month out of your pocket, and it's in an asset that is devaluing, in a currency that's devaluing. It makes no sense. If you look at it unemotionally from a pure mathematical returns perspective. And so I literally did it in the book. I did the Global Wealth Index. I went and took the equivalent to CPI, your Consumer Price Index, and I went and looked at a basket of goods. And you know that in South Africa, an example, your wealth is devalued by 29.5% year on year for the last 30 years. And this is really critical. The number two mistake I see people make, they say, oh, but don't worry, Scott, I'm diversified. In fact, I met a gentleman this weekend, actually, because I'm diversified. I bought a flat in London. I go, but hang on. Now you have one tenant, you have one management agent, one partner, and you have one income stream. That tenant stops paying, you've got a significant problem. You've got all your eggs in one basket. Maybe you could argue you've got two baskets now, but you still got the majority of your assets and your wealth in one property. The third problem with one partner, there's a guy I know, he went and invested in medical buildings. Now, I would have thought that medical buildings can stand the test of time. But as it turns out, you have COVID, and suddenly all the medical buildings, we've been investing in them since 2014, they would generally facilitate all the elective surgeries. So things like radiologists and, the people that do the x-rays and the physios and all the people that support the major hospital. Now, COVID comes along and all they have is ICU. All elective surgeries are put on hold. So suddenly all your tenants can't pay their rent. So suddenly these buildings that have been paying such good cash flow suddenly are not producing an income. And this gentleman, as an example, invested with one partner, and he has 8 medical buildings with him, 8 medical portfolios with him. Not one of them is paying a dividend. So if you look at diversification, he's got one company, one partner, one income stream, one asset class in one country, America, and in one currency. So although he thought he was diversified, he's actually not. He's 100% got all his eggs in one basket. And you could argue that he's got one partner carrying that basket. And if that partner falls over, all the eggs break. And so that's why we teach people about diversification 5.0. Because if I look at myself over the last 12 to 18 months, I've invested in 10 different asset classes, 4 different continents, 5 different currencies, 9 10 different assets, 9 different asset classes, and with 10 different partners. And that's what we call diversification 5.0. And the best part is that, whether you're a wealthy investor, and as an example, this gentleman had I think it was I actually don't know if it was a man or a woman, it doesn't matter. They had $100,000 and they said, how can I build a blended portfolio? And so I showed them how they could have a blend of diversified assets between income and capital growth with a blended return of about 15%. And I showed them the pain of leaving the money sitting in a bank account versus leaving it sitting in a property versus the benefits of building a diversified portfolio. And this for me is what diversification 5.0 is all about. And a great example of this is that it's that one-to-one portfolio analysis, which is where it becomes so powerful. A guy like Chad Pope started investing with us back in 2011. He started buying apartments in Australia. And then from that, he went to medical commercial in America and has subsequently branched out into other alternative assets. He's now even bringing structured notes to our platform. But he truly, he lives in South Africa, but he has the complete freedom to know that he's got a globally diversified, not only asset-based portfolio, but income streams. And that's the invitation and the journey that I'd love to invite you on in terms of that process. And so I'd love to share this little video with you. This was the video of Garth Wellman and Anthony Dinham that when they were sharing with our mastermind community around all of these different asset classes and how one builds your portfolio.
This doesn't change, guys. Asset allocation, and this is not all of the asset classes we work with, but asset allocation is going to account for 85% of your return and is the fundamental building blocks of asset management and a financial plan that's going to, produce income or anything. But Anthony's going to talk to this, and this will give you very specific kind of views around the returns, the averages, and where we think the value lies.
So it's really interesting. If you take what he just said there, 85% of your long-term returns is going to come down to portfolio construction, like how you build your portfolio. Now, my question is, are you going to outsource your thinking to someone else? Okay. Or are you going to try and do it all on your own? Are you just going to hand your money to someone else? Or are you actually going to learn about this stuff and you're going to get the right information and the right partners from the caliber of people like a family office? If you look at the portfolio construction, and I shared this with you in the spreadsheet, the benefits of private equity, and yet most people don't even have private equity in their portfolio. And if you don't have private equity in your portfolio, look at the impact that it has on your long-term returns. So look here, 0% private equity. Look at the long-term returns compared to even 20% private equity. This isn't my opinion. This is based on the research. Again, what the stock market's giving you on average versus what the investor's getting if they try and do it all themselves. And so for me, I've shared with you the importance, and I go back to the spreadsheet here, but the pain of not having the right information and the right partners is significant. And someone asked me, they said, what's the return on investment? And I said, well, it's significant. Just in a 2-year period, this gentleman's return on investment would be 272% if he had access to the right information, the right partners. And if you take it out over 10 or 30 years, the numbers just become ridiculous. And so my question to you is, what's your return on investment? What are you focusing on? How important is it for you to get access to the right information and the right partners? So I'll bring you on to the fourth lesson, and that's structure. And a lot of people say, yeah, but I need to go and talk to people and I need to get my offshore structure set up, and they put a whole lot of barriers in place and they try to go set up a cheap little structure in Mauritius or the Seychelles or the Isle of Man or the BVI or somewhere like that. And, there's one client I know that has a structure in the Seychelles, and then he immigrated to Portugal, and now all his funds are frozen because Portugal is pretty much blacklisted the Seychelles, and so he doesn't have access to any of his money. Not such a clever structure anymore. But one of the myths that I learned, and it's myth 10, we don't have time to go through all the myths today, but one of the things I've learned in myth 10 is that if you truly want to globally diversify, and depending on what level you're at, if you go to the standard kind of people that help you invest offshore, they'll literally put you in a box. They'll say, hey, we're going to set you up with a structure. And I'm just going to make it up Mauritius. And then they sell you all the investments that only fit in their box. That's not diversified. That's, again, one partner, all your eggs in one basket. To be diversified, and that's why I like to partner with a family office, because they build bespoke solutions for individuals based on their needs, their wants, and what they're trying to achieve over the long term. And it's critically important. But, equally, there's the other side of the fence, the pain of not doing something. I had one lady that got 20 million rand in inheritance money, and she sat for 6 years because she didn't know what structure to invest in. Well, in those 6 years, the rand has devalued by nearly 40%. So, even if she invested in a good asset, but with the wrong structure, she'd be far better off today than sitting doing nothing and having analysis paralysis. And, a good example of that is Manawapi. He is a successful business person. He invested, and when he tried to do it himself, he lost over $250,000. And he then found our company, Wealth Migrate. He started investing, and he's been able to build a globally diversified portfolio. And so sometimes it's not only the return of investment of actually investing, it's also the protection if you're getting access to the right information, the right partners to manage the downside in terms of that process. And so my question to you is, I'd be surprised if you're not feeling a little bit overwhelmed. And even if you've watched this before, it's a lot of information. It's 24 years worth of knowledge downloaded into 67 minutes. And so I love this picture because I always get blamed for, when people listen to me on a webinar, it's like drinking from a fire hose. And I started with a question, and I said to you, would you like to know in 12 months or less that you could be earning $5,000 passive income without any hassle or complexity? I asked you a second question. I said, would you like a system that will help you get there statistically 5 times faster, simpler, and safer? I've got a third question for you. Can I make you an offer that will literally show you how to create diversification 5.0 safely and simply in the next 12 months? So just let me know. Just say yes. I'd like your permission to share with you how you can do it safer and simpler and 5 times faster. So I can see there's lots of yeses coming through. I think people are starting to get the epiphany that I had, which is where I can try and do it all on my own, and I have to figure all this stuff out, and I can go and read all the books and go on all the courses and attend the webinars and do all the degrees, or I can go get the right information and deal with the right partners. It's just so much easier. And so I remind you that our objective is to help people live a life unlimited, and we do it through Diversification 5.0. The objective is to create diversification across countries, currencies, assets, partners, and time, and ultimately to build passive income in the middle.
This is extremely.
And this is a video that I love, which just shares how you can do this 5 times simpler, safer, and faster.
Now, this is extremely predictable. Tons of research around it. Humans change 5 times faster in groups than they do with a one-on-one coach, consultant, or therapist in that case.
Wow.
So I started looking back at business models and people who had done this effectively over the generations. Masterminds aren't new, folks. They're not new at all. People have been doing this for thousands of years. And when you put a collection of people together who are all committed, all driven, and all so want to make the right changes happen, and you give them a leader to follow who's willing to get in the trenches with them, all of a sudden you start finding real, rapid life or business transformation.
So I love the way he finishes there. It's real or rapid business transformation. And Angelique, as an example, you just asked a question, where do we get started? Well, that for me is why the mastermind became so important, because I'm prepared to get in the trenches with people and help them by working in a group. Because again, it's statistically proven that you'll get 5 times, more results quicker, simpler, and safer. And by doing it in a group, and with me jumping in the trenches with you, then you're going to get rapid results and transformation, like he said. And so that's why we created the mastermind, to allow people to achieve those results. Now, who's it for? Well, it's for people that are into personal development. So it's people who believe in growing and learning, and the fact that they're coachable. They don't know everything. The second thing is it's people that are wanting to build a globally, diversified income. So it's about passive income. It's not about capital growth. It's not about fix and flips. It's not about Bitcoin. It's about building passive income. And I want to, work with people that are committed to earning and building at least $5,000 passive income. And then it's not for brand new beginners. So whether you're an investor or you've got a portfolio of property or you've invested, for me, it's about, dealing with people. This is not a beginner course. Like I'm going to be working with you one-on-one. This is for, for people that have already got started, and I'm taking you to the next level. But ultimately, it's for people that want to go faster, safer, and simpler. And if I've learned one thing from dealing with people for 20 plus years, is that they want less hassle and complexity in their lives. Like, let me do it safer, simpler, and faster, but I don't want any more hassle or complexity. I want it to be safe and simple and easy. Who's it not for? Well, it's not for complete beginners. It's not for time wasters. It's not for people with no capital. And it's not for difficult personalities. I get to work with you one-on-one, and quite frankly, it's got to be fun for both of us to be able to get the results. What are we trying to achieve? Well, we're helping you build a globally diversified passive income across countries, currencies, assets, partners, and time. And it's all about the passive income, the globally diversified passive income, which sits at the middle. So what is the journey we go on? Well, it's effectively a 5-step journey. We got phase 1, which is the setup. It takes about a week or 2 to get going, and we get very clear on your outcomes. We then get clear on your starting point. I'll explain this in a bit more detail. We then work on your plan, your wealth plan. That's sort of in week 3 and 4, and we help design your own personal wealth plan. And then what I've learned with most people is that they have a plan, but it's all about the execution. And so even if you take your New Year's resolutions, on average, 9 to 12% of people actually fulfill on their New Year's resolutions, and that's the ones that write it down. The ones that don't write it down are less than 4%. And so the mastermind is the formula, which is all about execution, so that you get the results. And then it's the financial investment, and there's the 5 investment rhythms, which we follow. So this is the overall framework. There's 5 simple steps. If I look at it and just go into it in a bit more detail, in the outcomes, I'm a fully internationally recognized certified coach. So I take you through a process of one-to-one coaching where we define your top 3 outcomes, we define your top 3 measures, and we help you write them all down. So it's trackable, measurable, and it's the most important thing is that most people are caught up in their problem and their drama. They're too busy, they don't have time, they're running their farm or they're running their business. And what I do is I get very clear with you on what is your outcome. Once we got clear on your outcome, we then brainstorm the different ways of achieving it, and ultimately we get to the action plan. But it all starts with the outcome. And there was a gentleman out of Germany that joined the mastermind that went through this process. He's been a coach himself, a financial coach for 25 years, and he said he absolutely loved the process. Step 2 is the starting point. So for me, we analyze your property portfolio. We understand where you're actually at. I'm very grateful and very excited to say we partnered with a family office. Now, I remind you, you normally needed $250 million. Our family office partner is Calio. So Garth Wellman is their CEO and founder. And the reason that they've partnered with us, so they've got 60 families at the moment. They manage about $600 million US. But the reason they partner with us is that their core purpose is aligned with ours. The 1% can pay for the advice and get results. We need to support everyone else to get access to the same advice and results. So I've always struggled to know whether this client was at the right level to be handed over to Calio. But by creating the mastermind, everyone that's part of the mastermind gets access to effectively having their own family office in Calio. And so that's the starting point. It's the analysis not only of your portfolio. We had one gentleman that's a farmer, analyzed his entire portfolio, his trusts, his structures, and everything in between. Once you've got an understanding of that, it's then about building the wealth plan. So you know where you want to get to, you know where you're starting, and it's about building the personalized wealth plan. So that takes about a month in terms of onboarding. And everyone has their own personal, kind of wealth plan. And then it comes down to execution. And this is where accountability and mindset becomes so critical in terms of the process. And, people often get caught up in an away state, withdrawn, fearful, inability, demotivated. And the whole idea of a mastermind is to keep everyone in a towards state, happy, thinking clearly, creative, seeing new opportunities. You achieve that by being in the right mindset to be able to achieve that. How do we do that? Well, we've got a 12-month mastermind, so we check in once a month for plus minus 2 hours, and we literally work through. We've got a whole bunch of modules that you can go through, from time management, mental wealth. We actually had a doctor of psychology, doctor of psychiatry, that's a high performance coach, take our mastermind through mental wealth, and then even the concepts of flow. But what's most important is the accountability tracker. It's a system that I've been using since 2010, which is all about actually execution and monthly accountability. All of us have big goals that we want to achieve in a year or 5 years or 10 years. But what are we doing, weekly and monthly to actually achieve it? And that accountability becomes so critical, which is why an accountability coach, is there to hold your hand. And if you look at it statistically, 99% of individuals who've had a coach reported to be helpful. 95% of those reporting said it's been very helpful, and 96% reported that they would engage in coaching services. And so who would like me and my partner to hold your hand, to coach you? As one guy actually joked with me, he wanted me to kick him up his ass to get the job done in terms of the process. And then the last part is the investment part. And for me, there's 5 investment rhythms. So the first one is a financial understanding. Each month, we run through one of the major asset classes. So we've done structured notes, where many of the wealthiest investors invest. Many people haven't even heard of it as an asset class. I don't care how much money you've got. Last month we did multifamily. In March we did multifamily residential, which, by the way, has had the highest returns based on risk-adjusted returns in the last 12 to 15 years across American real estate. This month, we're doing medical commercial with a partner of ours that we've been investing in since 2014. In May, we're doing industrial, warehouses, and logistics. So you're really getting access to the best information and the best partners. You get access to the market and the currency analysis, whether it's James Painter on the currency side, or whether it's Calio in terms of the portfolio construction. It's all about helping get the right information and the right partners. And then it's about investing. It's about doing the deal analysis on a monthly basis to make sure that you're on track. And finally, it's about reviewing based on your wealth plan and tracking your progress in terms of this overall process. And so, as I say, 5 simple steps to help you achieve your outcome in terms of the process, and just, more testimonials from people that have really enjoyed the process. And then at the end of the year, well, ultimately you return to step 1. You go back, what are your outcomes for the next year? You cut, copy, paste. And so you really get to decide. You can do this all on your own. You've statistically, according to Harvard, got less than a 10% chance of succeeding. You can do it as part of our wealth hacker community, where you've got somewhere between a 30 to kind of 65, 70% chance of succeeding. Or you can do it with our mastermind, where we literally hold your hand, and our intention within 12 months is that you've got more than a 95% chance of succeeding. For those of you that want a few bonuses, by being part of the mastermind, you get access to, priority access to me and the team. You get access to our tax and currency partners. You'll also get access to our masterclass that we did on structured notes, which, just by the way, people are earning anywhere from 10 to 14% in dollars, pounds, and euros. I know it sounds too good to be true. It's why you truly need to understand this asset class. You can, get access to our masterclass multifamily discussion, and we went through all the different things. What is multifamily? What are the different sectors? What is it compared to other commercial real estate? What is the value chain? How to identify a good deal? How do you set up the partnerships? What is the state of the current market, and where to from here? And then, as I say, next week, actually, next Wednesday, we're actually got our partners that helped us invest in our very first commercial deal. This guy's been doing it since 1999. One of the most sophisticated property partners, real estate partners in America in this space. And by the way, in May, we've got industrial, which is also super exciting. You'll also get access to our wealth hackers. So just by the way, I'm not going to go through it today, but there's a huge amount of information and substance. So it's access to all our online stuff within our library. And then, for those that want to immigrate, access to our best partners, depending on what country you're wanting to immigrate. And then finally, something I'm wanting to start again is buyers trips, where people can actually physically get on a plane and come and meet the partners on the ground and actually learn how it's all done. So if you're interested in being part of the mastermind, how do you do it? Well, you literally book an investor strategy call. You go to diversificationmastermind.com, and you and I will have a one-on-one call. So it's me and you will have a call, and I basically want to understand what you're trying to achieve. I want to identify your risks. I want to understand what are you trying to achieve? What are the risks? And then I want to try and explain, if we can help and whether you qualify. Okay, so it's a one-to-one environment. I'm wanting to understand what you're trying to achieve. It's not for everyone, it's by invite only. And so I want to see if you qualify for the process. I only want to work with committed investors. And so it's about respecting each other's time. So if you do book a time slot, please make sure that you turn up, because my time is as valuable as your time. And what's really important on that call is that I've learned that when people pay, they pay attention. So one of the things with the mastermind is that there is an investment. And I showed you here as an example, the benefits of an investment when it comes to return on investment. Because when people invest their time and money up front, they tend to take things a lot more seriously. And that's why I showed this gentleman the significant benefit of a $5,000 investment and the return on investment that it would make to him in terms of his overall investment analysis over time. And then finally, because of time constraints, I work one-to-one with people. We onboard them with Calio in a one-to-one environment. We only have 5 spaces available at any one time, and we can only onboard people once we've got the previous people onboarded properly, etc. So we've only got 2 available opportunities at the moment for people to participate. So if you are interested, then go along to Diversification Mastermind. I know there's some time slots. I'm driving down to Cape Town later this afternoon. I've got some important meetings there tomorrow afternoon and Thursday. I know there's some time slots tomorrow morning, and I think there's some time slots on Thursday morning prior to the Easter weekend. Otherwise, you'll have to book a slot next week. I have learned one thing though. If you are serious about your wealth and your future, if this is something that resonates with you, I would take action today and I'd book a time slot. Those people that say they're going to do it tomorrow or the next day or after Easter, from my experience, don't do it. And then they come with some story. Scott, I watched a webinar from you 10 years ago. And again, that's why I built that spreadsheet, because not only is it the upside, but there's the downside of not taking action in terms of that process. So, the average person can see a return of investment of 344% from coaching, and businesses can expect over 700% investment from coaching. So, again, the best people in the world, whether they're investors, whether they're sportsmen, whether they're sports teams, work within a coaching environment. And the question I would have for you is, why would you not do that for yourself and for your investment strategy if diversification is something that's important to you? If, getting access to the right information and the right partners is something that's important to you, then that's why we created this. If building a globally diversified passive income is something that's important to you, then that's why we created this. And, that's why for me, from a guaranteed satisfaction perspective, we're only working with a few people here. And this is why I'm literally putting in the energy, the effort. I'm working with my partners, Alex and Shane. And, literally it's about getting the results. That's what I'm passionate about, getting the results. And, as someone just commented here, let's turn the watching you for 10 years into I've been investing with you for 10 years. I've shown you numerous examples. I mean, just put up your hand here. Who would like to be a testimonial 10 years from now? And you might notice it's 10 years. There's no such thing as a get-rich-quick scheme. Most of the examples I've shown you, joined 10 years ago. And obviously there's many, many people since then, but they're going through the process. And, but 10 years from now, please don't come back to me and say, oh, I've been watching you for 10 years. Like, I want you to be a testimonial. I want you to be a success. I want you to achieve your outcome. And Felicity said for big guys only. And I don't believe that, Felicity. I believe it all starts in the mind to start off with. And so my question is, who here would like to be a testimonial? And I remind you again of the return on investment. If you were investing $1,000 a month, which is, $12,000 a year, or if you've got $50,000 to be able to invest, or you remortgage a property or something like that, and you were to invest literally $5,000 in yourself in terms of being part of something like a mastermind, your return on investment over 5 years would be 254%. And you would make, basically in today's money, $12,000. So you spend $5,000 to make $12,000. In 10 years, it would be over 1,000%. You would make $57,000. You invest $5,000 today to make $57,000. Over 30 years, the numbers just get silly. It's close to $1 million in terms of that overall process. And so, for me, what I'm trying to share with you is I started this morning or today, whatever time zone you're in, with that epiphany bridge I went through, because I thought I had to do it all myself. I thought I had to go and accumulate all the knowledge and do it all myself. And then I just realized there was such an easier way. I could get the right information and I could partner with people. And it just took off for me. And that's why I've been trying to share with you today how you too can do that. These are just some pictures. And again, if you are interested in booking a call, I can see a couple of people have booked calls. I look forward to meeting you one-to-one. But just go to diversificationmastermind.com. But here are some pictures. This was in the old days, and I joke with people the old days, 10 years ago. If you wanted to invest overseas in the old days, you had to fly on an airplane with me. You had to come to America. We had to open a company and a bank account. We had to go find houses, and we had to buy the houses, and we had to manage them, and we had to fix broken toilets, and. You don't have to do any of that anymore. In the old days, I know I'm joking, but in the old days, you had to have a telephone. Now you got a cell phone. In the old days, you had to go and rent a DVD. Now you've got Netflix. The same with investing. It doesn't have to be complicated. All you need is the right information and the right partners. So this was us in New York. This is us in Times Square. This is actually Dolph DeRiss. So the guy that wrote this book, where's it gone now? Real Estate Riches. Here we are. The guy that wrote this book, this was actually me on a buyer's trip with him. So I was learning from him. And we were on the steps of the courthouse in America when all that mayhem was happening, 2010, 2011, 2012. This was us buying properties, on the steps of the courthouse in Phoenix, having some fun in the Grand Canyon, going to a show in Vegas, buying houses in Atlanta, buying more houses in Atlanta. This was us buying apartments, or what they call multifamily in America, opening bank accounts, learning from partners. All this is what you had to do 10 years ago. You had to get on an airplane. Now all you have to do is go to diversificationmastermind.com, book a call, and you can do everything from the comfort of your couch. This is us having some fun on Beale Street in Memphis, outside the New York Stock Exchange, up in North Dakota, which is where all the fracking is, and even having some fun at the, what do they call it? Not Oktoberfest. What's it called? Halloween. And some very, very sophisticated investors. Some of the wealthiest investors in South Africa have come with us and been on this journey of diversification in terms of the process. So why we believe you should work with us? Well, the excuses that I've heard over 20 years is it sounds too good to be true. I don't know how, too much compliance, ongoing management issues. But ultimately, it comes down to three things. I don't have the time, I don't have the money, and I don't have the knowledge. And really, for me, quite frankly, we basically negotiated this, because the mastermind's been created for people where time is very valuable. As Tony Robbins says, you can take decades and you can turn it into days. You can take 20 years worth of knowledge and you can literally get it downloaded quickly, whether it's me or the family office or the team. Getting access to the partners. You can try to fly all over the world, try and find all the best markets and the best cities and the best countries, or you can just get access to the right information and the right partners. And finally, I don't have the knowledge on how to do it. Well, you don't need the knowledge. You just need to know how to find the right information and how to find the right partners, which is why we've created what we have. And why we believe you should work with us? Well, we're the only one that can provide global diversification. There's lots of other platforms out there. There are lots of other ways of investing. You can go and invest in London. You can go and invest in medical, commercial in America. You can go invest in co-living in Australia. You can go invest in structured notes in Europe. But you can't do it all in one place, safely and simply. And that's what we help you do. And so I've been part of masterminds for literally 10 years. I think I signed up for my first one in 2010. This was me with Peter Diamantes, learning about exponential technologies. Cost me $14,000 a year. Roger Hamilton was $25,000 a year, which was an entrepreneur group. Mavericks was one of the top entrepreneur groups in America, and that actually got me to meet with Richard Branson. And then I did business mastery with Tony Robbins that cost me $50,000 a year. So I've invested a huge amount of money in getting access to the right information and the right partners. But I've learned, like my mother, when I spent $50,000, my mom was like, "You bloody mad." And I said, "Yeah, okay." But actually what I learned there and the people I met there, I 10x that in 12 to 18 months. So it's all about return on investment in terms of the overall process. And then it brings me on to the fifth lesson. And I promised you that there would be 5 lessons today, and I'm conscious of the time, but the fifth one is team. And the only ways to invest at the moment are if you yourself, you can go to a financial advisor, they'll go through an institution, they'll go through an investment vehicle, and ultimately you invest offshore. There's multiple layers, multiple fees. You actually, I don't have time today, but you're tied to the secondary market. It's not actually a primary market investment. Again, probably too much information, but it just doesn't work. I told you already, less than 1% of people actually retire wealthy because they're investing in the wrong things. Or you can try buy an apartment or a house yourself. And there's 16 different middlemen, and that's not even taking into account all the complexity and difficulties in terms of the overall process. And so, if you're wanting to do it yourself, hopefully today I've shared with you the lessons. You can go out and you can do it yourself, but you need to go and accumulate all of these people: lawyers, brokers, tax, due diligence, deal tracking, secured banks, investor reporting, KYC, blah, blah. I could go on and on and on. In fact, I could teach you for 2 days on how to do it yourself. Why? Because I've done it for 20 years, 24 to be exact. Or you could just use technology. You could use smart investing. And it's quite simple for me. If you're wanting to work with me and you're wanting to diversify, literally go to diversificationmastermind.com. I'll sit down with you one-to-one. I'll understand what your needs are. I'll explain what we do, and I'll see whether there's a match. Because rather than trying to go out and, do all this and find the right partners, we've spent millions of dollars flying all over the world for 20 years, finding the right partners. And so, back to a family office, not only as part of your team do you get our team, but you also get our family office partner in Calio. And, for me, there's something significant, to be dealing with a company that only deals with 60 families at the moment. But because of their purpose and their passion and their want to go towards technology and to scaling, they have agreed in a joint venture to partner with us in the mastermind, which is significantly important for our masterminders that get access to the right information and the right partners. And a good example of this was Alan, a very successful property developer. Rather than going to America and trying to do it all himself, he came over, he came on our buyers trips with us, he invested in multiple deals, and he's actually immigrating now to America, and he is doing it all on his own. I mean, our objective is not to take your money and do it ourselves. Our objective is to empower you so that you can do it. And Alan, that's exactly what he has been able to achieve. So why not join over 4,000 other people? Whether it's wealth protection, plan B, peace of mind, diversification, freedom, global citizen, empower your children, immigration, etc., etc., etc. Or is it just about living a life unlimited? Well, you get to choose. So what's our objective? It's diversification 5.0. It's countries, currencies, assets, partners, and time. At the middle is a diversified passive income. If you've been sitting here and been thinking, geez, I've been following you, Scott, for 10 years or 5 years or 3 years or whatever, or I've been too busy, or I don't know about this, or whatever all the different reasons are people have. Mark my words, that's why we created the mastermind. So that I can hold your hand, we can help you get there 5 times quicker, simpler, and safer. Yes, and maybe, as Rob, one of the guys said to me, maybe I need to kick you up the butt to get you to take action. But at the end of the day, it's all about getting the results. And that's what the mastermind is all about. Remembering that there's a 5-step process, it's a 12-month journey that we take you on. I remind you that we'll sit with you, we'll get very clear on your outcomes. It always starts with the outcomes. What is the top of the lighthouse? And I'm a globally certified coach to take you through a process. And most people don't take the time to get clear on this. And I will help you get the clarity. The second thing is we'll get clear on your starting point. What is your current property portfolio? What is your current portfolio in general? We'll work with our family office partner so that we both, get a lot of clarity on that. Thirdly, together collectively, we'll help you build a personalized wealth plan. not someone else's, yours, for you and your family and what you're wanting to achieve. And once you got your wealth plan, then it's all about execution. We have a monthly rhythm around accountability, mindset, and execution. And, like I said to you, most people find themselves in an away state. It's all about keeping and pushing yourself into a towards state. Now, are you going to do that all on your own? Possibly. But I can tell you statistically, it is so much easier when you're with a group of like-minded people that are all pulling in the same direction. And that's why you get there 5 times simpler, safer, and faster. I've told you already, there's a whole bunch of things around the mindset that we're consistently offering. But most importantly, it's about the accountability tracker and the accountability coach to help you get the results. And then finally, the 5th step, which is the investment. And as I said to you, there's an investment rhythm that runs monthly, whether it's the financial understanding, the market and currency analysis, the portfolio construction, the investing in deals, or the review. And I know it might sound overwhelming. I know it might sound like so much information, but actually it's not. It's 5 simple steps that start with one decision. One decision and one decision only. Do I want to build a globally pacified, diversified income? Yes or no? And if I do, today we've shared with you, the choice you have, because you can try and do it all on your own. Statistically, 10% of you at best will do it. You can do it as part of our wealth hacker community. You're somewhere between 30 to kind of 65%. Or I can hold your hand in the mastermind, and there's a 95% chance, according to Harvard, that will help you achieve your outcomes. And so go to diversificationmastermind.com. I remind you, again, it can take as little as $1,000 a month or $12,000 a year. And with that type of return on investment, you would literally be looking at a 254% return on investment over 5 years. Over 10 years, you're investing $5,000 to get over $50,000. Over 30 years, the numbers, just get to ridiculous. And this is the power of, if you understand compound interest, this is the power of having access to the right information and the right partners. And that's what the mastermind delivers. So I've already shared with you the bonuses: priority access to the team, tax and currency partners, the structured note masterclass, the multifamily masterclass, the wealth hackers subscription, the best immigration agents, and also access to the buyers trips if you are interested. What do you need to do? It's quite simple. Go to diversificationmastermind.com, book a call. And if you do book a call, please make sure you turn up. My time is very valuable to me, just like yours is. And I want to sit and understand what you're trying to achieve. I want to see if you qualify. Like I told you, there's only 2 slots. I'm very specific around the type of people I want to work with. So I listen to what you're wanting to achieve. I want to share with you what we're doing, because ultimately I want to help you win. And I can't help everyone win. So that's why it's by invite only. And as I say, there's only 5 spaces at any one time. Currently, we only actually have 2 spaces available. And maybe one day you'll be one of these pictures. This was us back in Times Square. This was us sitting, watching an ice hockey game, Madison Square Gardens, outside the New York Stock Exchange, buying commercial property in America, houses, having a bit of fun, learning from partners, at a bull fight. This was one of the buildings I invested in, which I love. It wasn't a great day, but there was a magnificent building, learning from Dolph DeRuis and actually sitting around an investment committee meeting. This partner here, Paul Shalanda, helped us invest in 7 different medical deals, an amazing guy. This was another building that we bought, a medical portfolio. This was us in Hong Kong, actually, talking with investment partners in Hong Kong. Another commercial property that we bought. But the bottom line is, for me, it's about satisfaction. It's about helping you achieve your results. What I'm passionate about is helping you achieve your results. And that's really what we're all about. If this is something that resonates with you, then I would sign up to diversificationmastermind.com, book a time slot that suits you and suits me. And as Alex said, maybe this will be the difference from, Scott, I've been watching you for 10 years, to, Scott, I've been investing with you for 10 years and I've achieved my outcome. And, that's really what we're all about. So just one last thing in terms of a bonus is that we did the global market review with Calio, and there's 6 videos that we've got. You know, what is the synopsis of the market conditions for 2023? What markets should one be considering in 2023? What risks should investors be aware of? You know, what determines 85% of your return? Why is private equity so important to your portfolio? And is there an overall strategy that investors should be focusing on? And we will be sharing, so watch out for your emails. We will be sharing a link where you can go and get the bonuses. Okay, so it will be diversificationmastermind.com/bonuses. For those of you that have waited and want access to the bonuses, we didn't want you to walk away empty-handed. So no matter what happens, thank you for being here. We deeply appreciate your time. You're going to get the market review with Calio. You're going to get the Ray Dalio wealth hack of where I took through Ray Dalio. You're going to get the TED Talk by Ray Dalio. And you're also going to get a copy of my book, Property Going Global, all as a bonus. And all that we really ask is that if we've added value to you today and you think this is valuable, I do these events live about once every month. And I'd really appreciate if you share with others so that they could you know, get the benefit. Do watch out for our emails. We've got some exciting stuff coming. Like I told you, Shane has convinced me, I don't know if this is a good thing or a bad thing for me, but convinced me to take the book Property Going Global and to upgrade it. So I don't know, we still need to come up with a fancy name for it. Maybe it'll be Property Going Global 5.0, but effectively it'll be the digital version. But what I do think is really important is that if everything we've spoken about resonates with you today, it becomes black or white. It becomes really, really simple. Book a call or don't book a call. Keep trying to do what you've always done and expect a different result, which, by the way, is the definition of insanity. And, you know, try to do everything on your own, or appreciate the epiphany moment that I've been personally through, which is getting access to the right information and the right partners and the material impact that that has, not only on you, but on your family and those that are important to you. And so my invitation to you is, you know, book a call. And hopefully if you qualify, it'll be wonderful to have you on the mastermind. So for me, any questions, anything that I have not answered? I can see there's a Q&A here. Let me go and see quickly. I've got a couple of yeses there, so that's fine. I've answered them live. Is there anyone else that has any questions that I haven't answered? I don't know, Shane, if there's anything I'm missing. Let me go back through. I did answer Angelique's question. Sorry, I'm not pronouncing that right. I'm interested in what you're presenting. What would be the best way to start for beginners? Look, on every airplane, you've got economy, you've got business, and you've got first class. Our mastermind's been designed as business or first class. There are other options. If you're wanting to get started, there's the wealth hackers and other ways to get started. So, you know, sign up to the platform, watch your emails, and we'll keep you updated. We'd love to know how popular student accommodation is across the world. So, Angelique, student accommodation is very popular. However, it's quite a saturated market. You know, again, back to trend analysis. Where can I find that slide quickly? I want to show you something quickly. Sorry, just give me 2 seconds. Right, where am I going to find that slide for you? Here, this is the slide I wanted to talk about. If you look at trend analysis, the problem with asset classes is by the time people become excited about an asset class, often a lot of the meat has left the bone. So for me, student accommodation is quite like that. You know, there's people, and we've got partners that have done significantly well in student accommodation, but it's quite a saturated market. If you want to know what the next student accommodation is, it's co-living. I was on a meeting this morning in Australia. We've got an investment in Australia that's co-living. It hasn't been a great investment. In fact, for a couple of years, this hole in the ground in Australia has caused massive headaches for me and the investors. But now co-living is really taking off. And literally this morning, they were talking about how this is such an exciting new asset class and why there's so much institutional money going into that space. So, you know, I think for me, why I'm showing you this is be careful. You know, if everyone's talking about commodities, which is what they were at the end of last year, it's at the top of the cycle. and often there's only one way down from the top. So just be careful of the stage of the cycle that one invests in terms of that overall process. Gillian said, I'd love to join and check all the bonuses, etc. Capital, I have one investment property with positive cash flow, but hopefully we'll have something in the future as I shift out of being a teacher. So yeah, look, Gillian, at the end of the day, for me, we've all got to start somewhere. You've already got property, you've got positive cash flow. I suppose the question you have to ask is, doing the analysis, is that getting you the best return? Are there other assets that could be getting you a better return? Sometimes you need to do the analysis and see where you're going to get that best return. And that's why I showed the analysis of the return on investment, the difference between, say, a 7% return and a 14% return over even a 5-year period is geometrical. Okay, let me see here quickly. Okay, Silas said it's on his radar. Lavalala, thanks for a positively mind-blowing session. All sounds very daunting, but I know I want to have my money work so much harder than a savings account. I've registered for the one-to-one, but honestly not sure if I fit the 3 Ps. Happy to sit down and have a chat if I don't waste your time. So perfect. I look forward to us chatting, and I hope you can also teach me how to pronounce your name correctly. I apologize if I've been messing that up. We do have a recording of the presentation, so we will be sharing it with people. If you're interested, you've got the link there. Someone was asking, where's the link for the meeting? It's diversificationmastermind.com. Yeah, if you want to chat with one of the team members, between myself, Shane, Alex, we're happy to have a chat. Claire is asking, do you ever invest in Dubai? Funny enough, I was in Dubai in August, meeting with a number of partners. We haven't invested in Dubai yet. And the reason being, many years ago, I remember Dolph DeRoos saying to me, be very careful if you're investing where other people, so if you're buying apartments and you've got a whole bunch of Russians buying apartments, they're not investing for the same things you are. You're looking for return on investment, you're looking for cash flow. And so to answer your question, Claire, we haven't done it yet. We always start with finding the right partners. So I went over there with someone I really trust. We met with a number of different partners. We are currently talking to a partner. In fact, I actually have a proposal in my inbox around a partnership agreement. And literally 2 days ago, I put a proposal together where Dubai is definitely a market, the UAE in general, that we're wanting to look at. But at the moment, it always starts with partners. Remember, I've said it all along today, it's about having the right information and then getting access to the right partners. So for us, it's all about finding the right information first and then about finding the right partners. But wherever you live in the world, Claire, which I think is important, your money doesn't have to live where you live geographically. And that for me is why global diversification is so key. However, with wealth protection, we only focus on primary first world markets. By the way, I would include Dubai in that list. So, at the moment we're in Europe, in England, in America, in Australia. Dubai is the next on our radar, actually, funny enough, in terms of that process. Okay, let me see if there's anything Q&A. When will there be new deals on the Wealth Migrate platform? So we are literally working. I actually got approvals just yesterday from one of our partners in terms of getting new deals on the platform. So we are aggressively trying to get new deals on the platform. Remember, it's not about quality. Sorry, it's not about quantity, it's about quality. We have had some challenges over the last 3 months in terms of getting new deals. 4 months to be exact, December, January, February, March. But we are very aggressively working now to get new deals onto the platform. Who can I contact if I have any questions on the current investments on Wealth Migrate? You can speak to me, you can speak to my partner, Alex. Just reach out to us. You should have, our details. Alex, I don't know if you want to just put your details into the chat box, and then people can reach out to you as well. I'm happy to help in terms of that overall process. Claire, I can see you booked a call, so awesome. Look forward to chatting and going through the process with you. Okay, are there any other questions? I know that I've gone a little bit over time. I said 90 minutes. My problem is I get a little bit too excited. So I go into too much detail and I start answering questions, and then this is a real passion of mine. Cabello said, have you had a look at Mauritius? Yes, I have, Cabello. In this book, I analyze Mauritius. There's pros and cons. It's a very small market. It's an island market. It's not a market we're focusing on at the moment. It's not a global market. We don't believe that it's going to provide global wealth protection. It's an emerging market. With time, we will look at other emerging markets. We are testing the waters with South Africa, only because we know a number of qualified partners there. It is something we'll do eventually, but not at the moment. All about the right information and the right partners. And again, Cabello, I recommend you read my book. I know it's 8 years out of date now, although it was written as an evergreen book. But, my philosophy with Mauritius or Cyprus or any one of these smaller places, particularly if you're buying to get the visa or the immigration or the passport, it's very different from buying a quality investment with a quality return. And that's completely different from someone who actually joined our mastermind a couple of weeks ago, 2-3 weeks ago, is in Mauritius right now, and he's buying an industrial logistics building so that he can expand his business further. But that's what he's doing for himself. Through Calio, he was put in contact with some people that can assist. So the whole idea of the mastermind is how can we benefit each other? But we're not currently investing in Mauritius. Cool. And the bonus link will be coming through to you on email. You'll also see there, if you look there, Gerry, it said get the mastermind bonuses here. And Shane has actually put the bonuses. It's also on the screen in terms of you can just go to that link. Cornelia has said, do you consider Panama or Ecuador, Colombia? Not at the moment, Cornelia. Again, there's many markets around the world. There's many good opportunities around the world. I've got no doubt that you name a country, there's a good partner with good opportunities. But for us, at the moment, it's less about trying to find new countries, because I believe you've got enough diversification between America, England, Europe, and Australia. So, it's about diversifying across countries, currencies, assets, partners, and time. And it's not about trying to bring 50 countries to the platform. What's important is to have, if we've got 5 different countries, 10 different asset classes, 3 or 4 different currencies, you can more than achieve Ray Dalio's formula. But we'll certainly help people in Panama or Ecuador, Colombia, invest. Right, I can see Shane's put up the link there for the bonuses. So I think that's probably all the questions. I will leave you with one final thought or one final comment. And that is, it's a saying that I personally have built all the businesses that I've built, and it's really what I've learned myself the hard way over the last 10 years. If you want to go fast, go alone. I try to do it. All the businesses I built, I try to do it myself, try to do it all, my investment, the businesses, I try to do it all myself. You can go much faster. I can go alone. I'm in control. Again, I remind the Afrikaans people, and again, I apologize for my terrible pronunciation, but ver van jou goed nou aan jou skade. Yeah, of course, it's much easier to go faster and do it on your own. But if you want to go far, go together. And for me, it's a great proverb of everything that we've spoken about. Because if you want to go far, if wealth protection is important to you, if diversification is important to you, if building a globally diversified passive income is important to you, if having a plan B is important to you, if having a peace of mind is important to you, if being involved in a system that can help you get there 5 times quicker, safer, and simpler is important to you, then that's why we created the mastermind. And my invitation to you is book a one-to-one call and let's see if we can assist you and if you qualify. And so my final slide is a thank you. You've got my details there for the person that was asking. You've got my details as well. So reach out to me. Between myself and Alex and everyone in between, we'll be able to assist you in terms of the process. And yeah, I look forward to welcoming you on your journey. I look forward to 10 years from now, you not being hey, Scott, I watched a webinar with you in 2023, but hey, Scott, I made a decision and I have now achieved my outcome, which is what we are most excited about. Okay, I hope that helps. Let me see quickly. I don't see any other questions. Shane, I don't know if I'm missing anything. I can think all the questions are done. Okay, I think we're done. To those of you who booked a meeting, I look forward to seeing you on the meeting. And to those of you that have not booked a meeting and for whatever reason decided that you don't think this is for you, watch your emails. Shane and I and the rest of the team are working on some very exciting stuff. As an example, our Wealthy Wednesdays are starting again on the 19th of April. And the very first one we're doing is around artificial intelligence. That's only going to be for our wealth hackers and for our masterminders. We've got two gentlemen that are going to be teaching you how to use ChatGPT. If you haven't used ChatGPT, it is phenomenal. You need to know how to use it. And again, it's this whole thing, get access to the right information, get access to the right partners, do it all yourself or do it together. But watch this space. We are out here to add as much value as we possibly can. So make sure that you watch the emails. There's lots of great stuff coming. And, I do remind you that for those of you who want to get in, quickly for the mastermind, there are 2 places available. And next week, Wednesday, we are doing medical commercial, which I highly recommend. It's one of the better asset classes, in my opinion, around the world. So come and learn from one of our best partners. And next month, we're doing industrial, warehouse, and logistics. And yep, you might be able to watch the recording one day if you sign up, later and can get access to the library. But I know from my own perspective, there's nothing more powerful than being present, being able to ask the questions, and being able to internalize and take action right there and then. And that, ladies and gentlemen, is my final thought. Have a wonderful day. Have a wonderful morning, breakfast, evening, no matter where you are in the world. And make sure that whatever you do, make the right decision for you and your family. I've hopefully shared with you the pain of inaction and the pleasure of action. Cheers.